Okay, so we've been getting a lot of commentary and questions from clients and followers about the currency market, so we thought we would take today's opportunity to chat about that. Investors have basically been conditioned to ignore the action in the currency market as of late. For the last year or so, volatility has been really low. In fact, we're at historically low levels of volatility in currencies such as the euro, the US dollar, and even the British pound. With that in mind, we're not going to talk about this today, but if you are an option seller, now is the time to rein in some of your risk. You don't want to have a lot of short option risk in a market that's really, really quiet. In our experience, when currency markets are quiet, it's temporary. Eventually something is going to change, and eventually the volatility could be big. And in fact, you may not even recognize any changes in the fundamental story. It might just be that everybody's caught short or everybody's caught long the dollar, and a small reversal turns into something big as people panic, especially during the summer. We've got lighter than usual volume, and sometimes moves that it would generally, in a normal market condition, be small might turn out to be really big just because of the summer light volume trading season. So while the currencies have been trading quietly, they're also trading at relative extremes. The US dollar is lofty. The euro is pretty cheap regard to historical standards. We're near multi-year lows. Now the euro has been cheaper, and it could potentially get cheaper, but the odds are, at the very minimum, we should get some sort of a bounce out of here. Before we really start looking at charts, I just want to make sure that everybody understands there's a substantial risk of loss in trading futures and options. Trading is not suitable for everybody. And also, if you're thinking of skipping this video because you don't trade currencies, think again. Regardless of the asset you're trading, whether it's stocks or bonds, in a traditional investment portfolio, or you're trading stocks and bonds in the futures markets through the ES, the S&P 500, or the 10-year note, or whatever it is, they will react to currency market volatility. Further, if you're trading commodities, you absolutely need to know what's going on in the currency markets. For commodities, currencies are one of the primary driving factors. If and when, I shouldn't say if, I should say when, volatility will eventually return. Maybe it won't be tomorrow, maybe it won't be next week, or maybe even next month, but eventually volatility will come back to currencies. And when it does, our gut feeling is it's probably going to support the upside in currencies that have been beaten down, so the British pound and the euro, and it's probably going to work against currencies like the dollar, who have benefited. To give you an idea of what the correlation between currencies and assets are, if you look at the S&P 500 and the 10-year note futures I'm referring to, they've settled in the opposite direction of the euro about 70 to 75% of the time over the last 180 trading days. So that's significant. So again, even if you're not trading currencies, you might get some information that could help you with your treasury trading or your stock index trading. So despite the range-bound trade that we're seeing in currencies, the global theme has been really consistent. Buy the dollar and sell the euro and sell the pound. There's a plethora of reasons for this, including Brexit, but one of the major driving factors is the interest rate differential. Obviously, with yields in the US high, I mean, we look at them as being low, but they're actually high if you look at the rest of the world. Investors are inclined to move money from the euro to the dollar to purchase US Treasuries, which are yielding roughly 2% on the 10-year, as opposed to buying European debt, which is mostly trading in negative territory, meaning you pay the bank or you pay the lender to take your money. So definitely interesting times that we've got going on in the global marketplace. But with that said, we're coming to a point where we feel like the fundamental story's out there. Everybody knows it. Everybody's thinking the same thing. Everybody thinks the same thing will happen, and that's precisely when the opposite happens. The market starts seeking another story, some other event to focus on, and now that we're past Brexit and we're soon to be past the Fed meeting, we think that's exactly what we're going to see in the next week or two. Taking a look at the euro chart, we can see that the euro, actually, take it back. Let's look at the British pound chart first. Sorry about that. So taking a look at the British pound chart, we can see that the market bottomed out roughly around 120 after the Brexit vote in 2016. Took a little ways for it to get there, but it did get there, and then it's since recovered to about 145. Now, the way we're looking at this is the 120 value in the pound is probably a worst case scenario in regards to what the market's thinking, and the 145 that we saw later the next year is actually it was about a year and a half later, is probably a best case scenario. Now, we don't think we're going to travel all the way back to the best case scenario right away, but we think eventually it is in play in the long run. In the short run, we think that the market's probably going to reject some sort of probe in the low 120s and make its way higher. A reasonable bounce would be to trendline resistance around 132.5 and maybe even 135 area. If we can break 135, the next stopping point is in fact 145, but we'll take it day by day and see how it goes. So if you are a currency trader, you may want to be looking at the potential of getting bullish on a larger dip here. If you're not a currency trader, you may want to react accordingly in your stock and bond portfolios. Okay, sorry about that. You know what? I think I managed to show you the wrong chart at the wrong time. Well, we talked about the euro. I'm sorry, we talked about the pound while looking at the euro chart, but let's talk about the euro while looking at the euro chart. That's the problem with live broadcasts, I guess. Sometimes you can't go back and fix the mistakes. But anyways, you get the idea in the pound. Just remember, 120 is a floor, 145-ish is a ceiling. We're currently trading in the low 120s. So in our view, the downside is probably limited and the upside is probably pretty attractive. Now we're looking at the chart of the euro. So euro's in a similar boat. The euro is impacted by the Brexit fiasco, maybe to a lesser extent, but it is impacted. The biggest driver in the euro is, of course, the interest rate differential. But if you'll notice, the market is sitting near support. We're reaching oversold levels according to RSI and some of the other technical oscillators. And we see that there's a trend line that dates back a couple of years. Every dip to this trend line has at least manufactured some sort of a bounce, although those bounces have been short-lived and the market sold back into them. But we're at that level where there's probably a good chance that downside's limited and upside has a little bit of potential here. So initially we would be looking for some sort of a bounce up to about 113.75 in the euro. If that area breaks, we think we could see 116 or so relatively quickly. That said, anytime you're trying to go against the trend, you obviously want to play small or play hedged. So we're not recommending that anybody jump off a bridge here. But the odds are when everybody's thinking the market's going to do one thing, it usually does the opposite. And so that's kind of what we're looking for here. Sorry for the mix-up on the charts. Hopefully you got something out of this anyway. If you want to learn more about some of the things that we do, if you want to sign up for a free trial of our newsletters, if you want to view trading videos which are free to access, you can visit our website. It's DeCarly Trading, DeCarlyTrading.com specifically. And if you're interested in any of the written material that we offer, we have multiple books. They're available on Amazon. The newest is Higher Probability Commodity Trading. Covers everything I've learned in the markets, good, bad, indifferent. So there's some decent stories in there, and it'll cover everything from putting together a strategy to analyzing the markets. And again, we're DeCarly Trading. We're a futures and options brokerage service, and we'd love to hear from you.